SoFi stock yet again today hit a new all-time low. Not so surprising, it's usually what happens these days with SoFi stock, but there is a huge silver lining here, and I want to get straight into this video. We are going to cover what happened in the markets today, what's going on with SoFi, what did Fed Jerome Powell say, and what to look forward to throughout the next coming days and coming weeks. So we are going to get into it. Hit the like button and subscribe to the channel. Only about 23.6% of you guys are actually subscribed to the channel. So that would be a huge favor to me. Thank you guys for doing that. Now let's get to it. So first off, I want to start with this article that really caught my attention. It says it's risky to not own shares of SoFi Technologies. Goes on to say the selling isn't over for SoFi stock, but exiting is another matter. SoFi Technologies continues to smartly build its ecosystem. Bears in SoFi stock have macro, price action, and company-specific challenges to counter. Shares of SoFi offer growth at a compelling discount for long-term buyers, and that's exactly the case. And even if you are concerned with the underlying business of SoFi, I think it's a little late for that because it's so cheap given its current valuation metrics. But you always have that buyout potential. I think if things went totally south for SoFi, and I think it would be hard to get there considering their largest segment of their business has been shut down for over 2 years, and SoFi has been just fine thus far and actually doing better than what people expected, then you will still have that buyout. Some company will want to buy out SoFi stock, whether it's a PayPal, that would look like an interesting prospect, a Square, another interesting prospect, or even something like Apple. There's a lot of different companies that would really fit into SoFi's business model that could afford to buy SoFi. Now, I am somebody that thinks SoFi is at least a 5 to 10x here in the next 3 to 5 years. So I don't necessarily want SoFi stock to get bought out, but I think there's a certain level of reassurance there that somebody would step in and buy SoFi stock, so all would not be lost. Now, we're not going to read this whole article because that goes without saying that this would be like an hour-long video. We have a lot of things to cover, but I will link it down below in the pinned comment. I want to kind of sum this up for you guys, and I do want to read this paragraph to you. It says, there are SoFi bulls, and then there's investor places Luke Lango. He has been very bullish on SoFi's future, going so far as to call SoFi stock the Amazon of finance. That would be huge given the reach of the tech giant as well as today's market cap of 6.6 billion valuation comparatively to Amazon's 1.5 trillion value. Now, I don't know if SoFi stock would ever get to the level of Amazon, but it certainly has a lot of prospects that are ever growing, right? People are ditching traditional banks. They're going for fintechs like SoFi. And I know a lot of personal people that have used SoFi that like SoFi. And given SoFi Stadium and the Super Bowl, you cannot forget that a majority of at least Americans have heard of SoFi. So that is going to ring a bell. And studies have shown if you hear about something once, you will remember it. When you hear about it again, you are more likely to use that product or service. That's why they advertise on commercials. Think about this just briefly. We're not going to dwell on this too long, but that's why they play commercials, right? It's not because you're going to pick up the phone or run out and go buy the product. It's because you subconsciously have heard that before. So when you're in the store and you're choosing between Campbell's, an off-brand, or a new brand, just like soup, we're just going to point out soup because I guess it sounds good and I guess I'm hungry, then you're more likely to choose the Campbell's or the Charmin, right? Or the Bounty because you heard of those before via commercials. They are familiar in your brain. Familiarity breeds business, and that's why things are advertised. And I think that was a huge win for SoFi that I don't think a lot of people have fully considered, right, for the longer term. But to sum up this article for you guys, what I got out of this, because I read the whole thing. Obviously, I read a lot of articles on SoFi, and I bring you guys the most compelling ones. That given the challenges that SoFi currently has, their largest business model that has been shut down, the Fed is definitely not their friend, trying to kill all demand. President Biden literally extending the student loan moratorium. I mean, probably throughout the rest of 2022. If there was a bad time for SoFi, it's now. I don't think the situation could get much worse. And I will knock on wood here because I don't want it to get worse. But what I'm saying is you're kind of buying it with very little bullish expectations. Nobody expects SoFi to do good. So if they do, and they can prove that, hey, we need a higher valuation, whether it's earnings reports, whether it is other things that the business does, the stock will rebound, and it will rebound very, very aggressively. And the fact that SoFi just lowered their guidance in a substantial way, it's going to make it a lot easier for SoFi to impress investors coming on earnings. That is going to be on May 10th. Let's go ahead and verify that again. Yes, May 10th is SoFi earnings. Now, you do have PayPal earnings as well on Wednesday, April 27th. So that's going to be a very important one. PayPal is kind of in the same boat of just getting absolutely destroyed. PayPal is literally at the March 2020 crash lows, when people thought the world, the whole global economy was coming to an end. You want to buy low and you want to sell high. Everybody knows that, but everybody forgets that during the moment because fear takes over. You want to be a net buyer, in my personal opinion, not a net seller. And then obviously buy low, sell high. So let's switch gears. What actually happened in the markets today? Well, the most notable thing was Fed Jerome Powell. Now, we didn't get 100% clarity like I wish we had, but he gave us enough to go off of. So Powell says taming inflation absolutely essential and a 50 basis point hike possible for May. The key points: Fed Chairman Jerome Powell on Thursday said the central bank is committed to raising rates expeditiously to bring down inflation. That could mean an interest rate hike of 50 basis points in May as prices rise at their fastest pace in more than 40 years. Quote, "It's absolutely essential to restore price stability," he said. And he also did go on to say that without price stability, you cannot have a thriving economy for a long-term duration, which is 100% true. And after all of this is said and done, things will be good again in the stock market. That's my personal opinion. We've seen valuations really come down for a lot of stocks like SoFi, a lot of higher growth stocks. They've really come down. They're expecting like the worst case scenario, getting the full kitchen sink thrown at them. And that's where the opportunities really are. It's not when stocks are hitting new all-time highs where the opportunity is. The opportunity is right here and right now, especially in my opinion, in the fintech sector. That's why about 35-40% of my whole entire portfolio is in fintech stocks. SoFi, Square, and PayPal. Why own one when you can own all three of them, right? Provide you guys a little bit more stability in that sense. And that's not a recommendation. Do not put 35-40% of your whole portfolio in finance or fintech stocks. But it's a big bet into the future nonetheless. And as long as you have a time frame here, whether it's 5 or 10 years, you will do absolutely fine. Not much is guaranteed in the stock market, but I don't think fintech is going away anytime soon. That is a continuously growing business. And it will be, or sector of the economy, and it will be for a very, very, very long time. Now, what to expect here in the next couple of weeks, next couple of months? Well, if we take a look at the Fed funds rate monitor tool, we are expecting that 50 basis point rate hike like Fed Jerome Powell pretty much confirmed today. It's surprising he still was cautious about saying the 50 basis point hike or not, because the markets are fully expecting it. 97.1% chance of a 50 basis point rate hike. Now, here in the short term, if coming to this May 4th meeting, if we do see a 25 basis point rate hike and not the 50 basis point, the markets would likely rally off of that because they would say, hey, maybe the Fed's not going to be as aggressive. But I think it really comes down to the balance sheet in that regard. When the Fed reduces their balance sheet, they would pretty much flood the markets with bonds. When they do that, it drops the price of bonds, and you see the bond yields going up, which we have continued to see. So the markets right now have already priced in quite a bit of tightening, with the bond rates going up over 1% here in the last month and a half. Bond rates have went from 1.74% back here on March 4th, now sitting at 2.90%. So about 1.2% has already been priced into the markets. That's why mortgage rates are hitting, 12-year highs. That's why auto loans are going up. Credit cards will soon go up. So there's been quite a bit of tightening in the economy, and I don't think the Fed is going to act as aggressively, or they won't need to act as aggressively because of this. And that short term should be seen as a very bullish thing for SoFi. So that's that. The markets are really going to trade around the Fed. The probability for a recession as well. Fed Jerome Powell today, as well as other central bank leaders around the world at the IMF, it stands for International Monetary Fund, they were very optimistic about the overall economy. They said, hey, why are people pricing in a recession or thinking about one when we're expected to grow over 3% this year? That is a normal growth rate from 2011 until 2019. That's what we on average grew at. So why are we pricing in a recession? They were basically saying it was silly to say we're going into a recession here in the near term future. If we are heading into a recession, they kind of indicated it would be 2023, possibly end of that year. So we have plenty of time from now until then to see a sharp reversal in the markets, and the markets tend to overdo things to the downside and then vice versa to the upside. And that is my daughter just going absolutely crazy. She has been giving me hell today. So we're just going to try to roll through this video. Try to not pay attention to her screaming over here. But nonetheless, let's talk about SoFi stock. So what has actually been going on? Well, the sellers are gone out of SoFi. The shorts have taken over. The short interest is currently at 20.44%. That is extremely bearish on the stock. And usually when short interest is this high on such a great business like SoFi, you tend to want to be a buyer. The shares that are sold short is sitting at 147.68 million, cost to borrow max of 4.33%, utilization of 100%, and days to cover sitting at 3.35. Now, if the Fed does come out May 4th and only does a 0.25% rate hike, then you'll likely see a large bid come into SoFi stock. You'll likely see the stock trend back to that $10 or even $12 price range, because that would price in essentially less rate hikes, more demand for SoFi products. Now, ultimately, I think the big catalyst for SoFi is when student loans are not under forbearance anymore, when people have to start paying those student loans again. And for those people that think that day is never going to come, it is absolutely going to come. Why is that? Because the government cannot afford to get rid of student loan debt. Government-owned student loan debt is the largest asset of the United States. They simply cannot do away with it. And it's actually hurting the government's balance sheet by continuously doing this moratorium on student loans. So that's not going to happen regardless of who wants it to happen. And that's a positive thing overall for SoFi stock. Now, the option flow sentiment, 15 orders totaling $2.81 million, positive order value of 90%. Over the past week, 51 orders totaling $17.07 million, positive order value of 59%. You are seeing a lot of this long-term bullish activity. Virtually none of this option activity is for the next couple of months. You're really seeing the January 2023 options catching a bid and the 2024 options catching a bid. And at these prices, they are very, very attractive to buy some 2024 options, get some leverage on your position. What this is really telling me is that hedge funds, institutions are pretty bearish in the short term, but very bullish in the long term. So I think that's the kind of mindset you have to have. I wouldn't set a week or a month or a year time frame on this, even though I do think in the next year you would be substantially profitable if you bought at these levels. But I think this is really one of those trades where you want to give it some time. Keep in mind, the day you plant the seed is not the day you reap the harvest, ladies and gentlemen. I think that'll be pretty familiar with all of you. And I do just want to remind you guys before we end this video, after we take a look at the charts real quick, institutional investors continue to buy SoFi stock. This is obviously likely with a long-term outlook, so just keep that in mind. The max pain for SoFi stock by the end of this week is also $7.50 per share. So that would indicate a potential move to the upside. We did have Snapchat earnings today. Not really too related, obviously, to SoFi, but they were kind of not too bad, not too good. So earnings are going to be very important in this day and age. Specifically, SoFi earnings, goes without saying, it's going to be important for SoFi stock. Now, if we do take a look at the stock price, we're heading back down to about $5 per share. That's kind of the trend that we are in right now. We're up a little bit in after hours, so we'll see if this does reverse and what ultimately does happen. But you're either heading back down to 5 and going to find support there, or you're going to head back up to about $10 per share. The 50-day moving average is at $9.65 per share, and that's going to be the real next level of resistance if we do get a pop for whatever reason that is. Maybe the war in Ukraine ends, maybe the Fed only does a 0.25% rate hike, maybe inflation ticks down. Whatever the reason is, that's going to be the next major resistance level when that time does come. So that is going to be all for this video. Hit that like button and subscribe to the channel if you guys found value out of this video. Hopefully a decent perspective and opinion, and really that's kind of the way that I look at SoFi stock. So that's it. Go ahead, read that article if you guys want to. Link down below in the pinned comment. Thank you guys for watching, and I will see you in the next one.